Welcome students. Good evening Surbhi, and good evening to everybody who has joined. So students, day before yesterday, we had understood structure of banking in India, and we had also understood the main terms associated with audit of advances and what should be the approach of auditor of a bank while conducting audit of advances. So today we will be discussing about students audit report in case of a bank, overall audit approach, audit of revenue items, meaning approach to be adopted by the auditor in case of audit of profit and loss items, and some other balance residuary matters which were not covered day before yesterday. So students, we have already understood that balance sheet and profit and loss account of a bank are prepared in accordance with third schedule of Banking Regulation Act 1949. As we have discussed day before yesterday, balance sheet is to be prepared in accordance with Form A, and profit and loss is to be prepared in accordance with Form B. Now, Section 30 of the Banking Regulation Act 1949, students, it specifies that audit of financial statements of a banking company shall be conducted by a person who is duly qualified under a law for time being in force to act as auditor of companies. Now, who is qualified to act as auditor of companies in accordance with present laws? You already know that a chartered accountant is qualified to act as auditor of companies in accordance with provisions of Companies Act 2013. So therefore, the audit of a banking company is to be conducted by a chartered accountant, a firm of chartered accountants. Okay, guys. So Section 30 of Banking Regulation Act specifies it to be so. You have to remember that this is the section, this is the law provision of the Banking Regulation Act 1949, which requires chartered accountant or firm of chartered accountants to be appointed as auditors of a bank. Okay, clear, guys? Now, all the students, you have to remember that all the eligibility conditions prescribed in section 141 of a company auditor and all qualification and disqualifications which have been prescribed in Companies Act 2013, which you have already read in your chapter on company audit, they also apply to the auditor of a bank. So all the qualification, disqualifications, things which cannot be done by the auditor of a company, they are also applicable to the auditor of a bank. Okay, all the disqualifications, same disqualifications are there also, since you have already read about these in your chapter on company audit. So there is no point in repeating it again here. And then we come to appointment of auditor. Now, how auditor of a banking company is appointed? Appointment of auditor. Now, students, you have to understand that in case of nationalized banks, there are auditors at the central office level, at the head office level, who are known as statutory central auditors. Who are known as statutory central auditors. SCAs for in short, statutory central auditors. And there are auditors who are conducting audit of branches of the nationalized banks. They are called as statutory branch auditors, SBAs, statutory branch auditors. Okay, so in case of a nationalized bank or what we call as public sector banks, auditors are appointed by the board, by the bank acting through its board of directors, whereas in case of other banking companies which are not nationalized banks, auditors are appointed by shareholders in general meeting. Okay, so in case of nationalized banks, you have to understand that branches are being audited by firm of auditors, and there are separate auditors at the central level, at the head office level, and branch auditors are submitting their reports to statutory central auditors, where consolidation is done, where consolidation is taking place, zone wise, region wise. Okay. So RBI directions also mandate that branches of nationalized banks have to be audited by branch auditors, whereas there is no requirement in case of private banks. Okay, because in private banks are generally appointing one firm of auditors, because their whole systems, whole their infrastructure is also centralized. Say, and they usually do not appoint auditors for branches separately. So in case of nationalized banks, the auditors, both statutory central and statutory branch auditors, both statutory central and statutory branch auditors are appointed by the bank acting through its board of directors and with prior permission of Reserve Bank of India. Students, that is very important, that in case of banks, prior permission of RBI is required before appointment of auditors. Okay, and in case of other banking companies also which are not nationalized banks, although auditors are appointed by shareholders at the annual general meeting, prior permission of RBI is also necessary in that case also. So prior permission of RBI is required for appointing auditor of a banking company. That's very, very important. Okay. So that's clear to you. So guys, how does this process operate practically? Look, the ICAI invites applications from eligible firm of auditors, eligible firm of chartered accountants, who are interested in applying for statutory, statutory branch auditors, statutory branch audits. So the panel is prepared by the ICAI. It divides the firm into different categories depending upon the number of partners and the experience, and the final panel is then sent to RBI. RBI scrutinizes the same and it sends back the panel to the public sector banks, and from this panel the public sector banks are appointing auditors, are appointing branch auditors. What we are discussing is about branch auditors. I given you an example. Okay, and once a firm is selected by the public sector bank for audit of branches, then it has to give its consent for the same, and that consent is irrevocable. Okay, so is that clear? So the most important thing which comes out of this is that in case of nationalized banks, auditor is appointed by the bank acting through its board of directors with permission of RBI. And in case of other banking companies which are not nationalized banks, auditor is appointed by shareholders at the AGM with also with prior permission of RBI. Permission of RBI is necessary in both the cases. That is the most important thing to remember. Okay. And all the powers of auditor which a company auditor has, the same powers are vested in the auditor of a bank or auditor of a branch of a bank. Okay, so those powers are identical, like the powers to call information and explanation, the power to inspect books of accounts and records, etc. All which you have read in your company audit. Same powers are applicable here also in case of in case of a bank, in case of a banking company. And what about most important thing, remuneration? The auditor has performed his work. Now, what about his remuneration? In case of nationalized banks, the remuneration of auditor is fixed by Reserve Bank of India, by RBI in consultation with central government. And in case of other banking companies which are not nationalized banks, remuneration of auditor is fixed at the by the shareholders at the AGM, just like as is in case of other companies. The provision which we are having in the Companies Act 2013. Okay, so clear up till now. Now we come to the auditor's report, the main thing. Now, what are the contents in the auditor's report of a bank, and how what types of report a bank auditor has to give, what kind of certification he has to give. So it is quite a broad list, but vast list, but we will go by whatever is stated in your module, keeping in view the scope of the syllabus. So in case of a nationalized bank, students, you have to understand auditor's report in case of nationalized bank. Now, as per laws applicable to banks, to banking industry, the auditor has to state clearly in his report that whether financial statements, in his opinion, give a true and fair view of the state of affairs of the bank. He has also to state whether any transactions which have come to his notice during the course of audit, these have been in the powers of the bank or not. He has also to state that whether or not the returns whether or not the returns received by him for the purpose of audit from other branches or offices have been found to be adequate. Okay, so these are some of the important matters which are required to be stated in the auditor's report. Besides all the things like which you had studied in the chapter on audit report, these are also stated there, like key audit matters, like emphasis of matter paragraph, other paragraph, and all matters which are required to be stated in accordance with section 143 subsection 3 of Companies Act 2013. Okay, so that's clear to you, students? And the auditor has also to ensure that uh, it is stated in the report that audit has been carried out in accordance with standards on auditing, and he also states auditor's responsibilities with respect to carrying out of audit, and he has also uh, to keep in mind that he has to state in his audit report that how many number of branches of bank are there which have not been audited, and what is the quantum of advances, quantum of deposits, and interest income in relation to these branches. Okay, and all matters required in section 143 subsection 3, whatever you have studied in chapter on company audit, the same identical points ditto 1 to 1 are applicable to banks also. And one more important thing you have to remember, guys, that CARO 2020 is not applicable to a banking company. While reading CARO 2020 in your chapter on company audit, it was also told to you that it is not applicable to banking and insurance companies. In the starting point, it is stated there that these are not, it is not applicable to such and such entities. Okay, so this is also important point to remember that CARO 2020 is not applicable to a banking company. So the auditor of a bank has not to report on the points which are stated in CARO 2020, which are although in case of a company to which CARO 2020 is applicable, all the auditor has to give his comments, his observation on all the points which are there. But in case of a banking company, be it a nationalized bank or be it some other banking company, be it some private sector bank, CARO 2020 is not applicable. That you have to remember. Okay. So besides his main audit report, students, you have to understand that that auditor of a bank has also to give some other reports. Like he has to give a report called as long form audit report, which in banking parallels is called as LFAR, long form audit report. We will discuss about it shortly, not in detail, but in a very brief manner, which is in the scope of your syllabus. So, what is long form audit report? Basically, guys, long form audit report or LFAR, it is known in abbreviated form. So it contains many points relating to assets and liabilities of the bank. Like it contains points relating to cash, to bank balances, to advances, like how is the system of credit appraisal in the branch, list out the advances examined for the audit, shortcomings found by the auditor in credit appraisal, and it asks many questions to the auditor that whether he has verified this, what are the shortcomings on this aspect, whether NPAs have been identified properly in accordance with the RBI norms on asset classification, whether provisioning has been conducted, and it also asks questions on items of income and also on liabilities. So it is a fairly exhaustive kind of report in questionnaire form, in which the auditor has to give his comments. So what is happening practically is that branch auditors LFAR are prescribed in consultation with RBI. Okay, so that's clear to you guys. Long form audit report and other kinds of report like whether the bank has made compliance on SLR requirement. SLR, you understand, statutory liquidity ratio. You might have studied it in your other classes. Statutory liquidity ratio, a percentage of deposits which the bank has to keep in securities broadly. Okay, it is known as statutory liquidity ratio. So the auditor has to he has to give his report whether statutory liquidity ratio has been complied with by bank as a whole on different dates. Okay. Similarly, the auditor has to give report whether treasury operations of the bank have been carried out according to the norms. Now the bank routinely purchases securities and sells securities. Now all these functions come within the broad domain of treasury operations of the bank. So this is also a technical area, and it is automated these days. So the auditor has to give a report on this also. Besides, the auditor has also to give a report whether the bank has complied with the Ghosh committee recommendations and Jilani committee recommendations. So Ghosh committee recommendations basically contain checklist for in respect of frauds and malpractices, whereas Jilani committee report contains checklist regarding supervision and internal control systems. Okay, so these things you can broadly understand, and now we will discuss, we will see the audit report of a public sector bank, how practically independent auditor's report of a public sector bank looks like what we have discussed, whether the same points are present there or not. I will also show you how long form audit report looks like. Okay, that is not in the part of your syllabus, but once you see it, you can have a fair idea, you can have a fair image in your mind, and it would be easy for you to remember also. You will not forget. Okay, so let me share the screen with you guys. What is happening in your mails? Let me check. Yes. So screen is visible to you guys? Let me know. Let me know whether screen is visible to you or not. Now this is okay. This is audit report of a public sector bank. Now, how does it start? Independent auditors report to the members of so and so bank. So first of all, like we had seen in the chapter on audit report, guys, first there is a heading. Now you correlate it with your chapter on audit report. First there is a heading, then it is addressed to the to the members. Okay, and it states we have audited the financial statements of so and so bank, which comprise what? It identifies the statement which have been audited. It also identifies the period, balance sheet, statement of profit and loss, cash flows for the year ended, including a summary of significant accounting policies. And it also states the most important point, that the financial statements also include the returns for the year ended on date of so many branches which have been audited by us. It means that 20 branches have been audited by statutory central auditors, and remaining branches of so many branches, including 4 foreign branches, audited by statutory branch auditors. So the statutory central auditors are clearly stating that how many branches have been audited by us and how many branches have been audited by statutory branch auditors. So they have taken into consideration the contents of the reports of statutory branch auditors. Okay. And it also states that branches audited by us and those audited by other auditors have been selected by bank in accordance with the RBI guidelines, etc. So, and one more thing important, it states that balance sheet and profit and loss, this is also very important. There are the returns from so many number of branches which have not been subjected to audit. So auditors are clearly stating that so many branches have not been audited. Guys, you have to understand that in case of public sector banks, there are thousands of branches. So in a year, some branches which are small branches relatively, which are having lower quantum of deposits and advances, they are not selected for audit. It is in accordance with RBI guidelines. And it also states that these unaudited branches constitute so much percentage of advances, so much percentage of deposits, so much percentage of interest income and interest expenses. Okay. Then it goes on to state that all the three things, that these give true and fair view, balance sheet, profit and loss and cash flow statement give a true and fair view. Okay. And again the same thing which we had studied in the chapter on audit report, after opinion the auditor gives basis for opinion. So guys, you are studying chapter on audit of banks, but simultaneously we are also refreshing our chapter on audit report. So what, because this is audit report of a bank and the format of audit report you have studied in your chapter on audit report. Okay. So the same things, that audit has been conducted in accordance with the essays and what are the auditor's responsibilities. Okay. And the audit has been conducted independently in accordance with the code of ethics. These things. Thereafter it contains key audit matters which we had discussed. It contains what the matters the auditors have identified as key audit matters and response of auditor to those key audit matters. How those key audit matters were discussed. Okay. So and it also shows emphasis of matter paragraphs and such things. Auditor's responsibilities, other matter, section 3. So here in this report also the auditors have given a report on effectiveness of internal controls over financial reporting, which is there in an annexure. I'll try to show it to you. Look, this is here. Report on the internal financial controls over financial reporting. Okay. So this is the report. So in case of because Companies Act is also applicable, I had told you. So whatever is there in reporting requirement is there in Companies Act. To the extent it is not inconsistent with the provisions of Banking Regulation Act or another enactments applicable to bank, the same are also to be reported. Okay, and all these matters which are there in section 143.3, they are also to be reported. Like there are no comments on financial transactions which have any adverse effect on functioning of bank. Now this is a 143.3 matters. This is also a 143.3 matter, that none of the director is disqualified from being appointed as director. Okay, and there are no qualification, reservation, or adverse remarks relating to maintenance of accounts and other matters. So all these matters, these are there in which are there in Companies Act 2013, which are required to be included in an auditor's report, are also included in the audit report of a bank. Okay, guys. So is that clear? Is that clear to you, students? So Pooja is asking, is there any limit on that branch is not required to be audited? Pooja, RBI is issuing guidelines, instructions in this respect from time to time. So there is no limit as such in law, but it is subject to RBI guidelines. So RBI from time to time is changing how branches are to be selected for audit. So banks have to follow that. Okay. So now, guys, we have seen how an independent auditor report of a bank looks like. Now we will also understand how long form audit report looks like. What are the questions asked from the auditor in a long form audit report, in a LFAR, which are to be answered by the statutory branch auditor. Okay, the long form audit report, all the contents is not in your syllabus, only a paragraph or two is written in your module. You have to understand this much only, but for the sake of remembrance and for practicality, I will show you the contents of long form audit report. Okay. Now look, this is long form audit report. Now it contains name of bank, branch code, and it asks questions about all the things like assets. From the, you remember guys, the balance sheet of the bank, what was the first point in on the asset side? It was cash and balance with RBI. So it begins with cash. Like, does the system ensure that cash maintained is in effective joint custody of two or more officials as per instructions of controlling authorities of bank? Now, this is a internal control question. It pertains to internal control of cash because cash is always maintained in the joint custody of two or more officials in accordance with the guidelines laid down by head office of the bank. So the auditor has to verify whether practically it is being done so. So he would check daily cash register and see how whether it is being signed by two responsible officials, and what is the system that it is being followed practically. Okay, like this, like there are questions on cash. Similarly, like there are questions on advances. So I will show you advances. Like it asks credit appraisal. It asks, in your opinion, has the branch generally complied with the procedures, instructions of the controlling authorities of bank regarding loan applications, preparation of proposal, renewal of advances, enhancement of limit, including documentation in respect thereof. So auditor has to give his comments here. Although in many banks these days, the filling of LFAR is also online on an application software. Okay, so here the question asks the auditor whether the loan application received by the branch are being properly vetted. These are being properly appraised. Appraised mean to assess. So whether the branch has properly processed those applications for proposal, and whether documentation has been obtained, and it also contains many sub questions. It has, this question has many sub parts. Now I will show you this. Like this, have you come across cases of quick mortality in accounts where a facility became non-performing within a period of 12 months? Quick mortality means, guys, where the loan was sanctioned, say on 30th April, or say on 1st April, and within 1 year, it, as on 31st March, it became NPA. So quick problem accounts in which the account became non-performing, it ceased to generate income from bank within a very short span of time. So what does this mean? This means that appraisal was not conducted properly. That bank authorities, bank manager, the concerned official, he did not make due diligence, and or the project was not properly appraised. Okay, so like this. Whether in borrower accounts the applicable interest rate is correctly fed into the system, whether interest rate is correctly fed into the system, into the master data. So such kind of things like sanctioning, whether credit facilities having been sanctioned beyond the delegated authority. Now we had discussed that in a bank, the loan is sanctioned according to the level of delegated authority. Like if the branch is headed by the chief manager, he might be having a lower delegated authority. If the branch is being headed by AGM, then he might have higher delegated authority. So whether the loan sanctioned at the branch are in accordance with the delegated authority of the branch, and whether the loans falling beyond the delegated authority of branch have been sent to controlling authorities for sanction. Okay, so these kind of things are there. So similarly, there are questions on virtually every aspect. You have not to study it too deep, but just for understanding purpose, you can understand what are the question asked in long form audit report. Okay, so you will not forget how does a long form audit report look like. Is it clear to you guys? You have found it useful or not? Tell me. Report. And that you have to remember that it is also required to be, it is a report which is required to be submitted in addition to the main report by statutory branch auditors, and all the reports of different branches are consolidated at the statutory central auditors level, and consolidated report for the bank as a whole is being submitted. Okay, okay. And the question, Surbi, again you are asking the questions which are there in the screen. These are in the audit report. No, these are not in main audit report. These are in long form audit report. The auditor of a bank has to issue a main report, which is independent auditor's report, and there is also long form audit report, which is in this question answer format, which the screen I had shared just now. Okay, is that clear to you, Surbi? Please let me know. Sandeep Sandhu is saying video is buffering. So I would request technical person to look into it. Okay. Anybody who is having video buffering problem, he can refresh. He can refresh the page. So guys, you have also to understand that as per RBI circulars, and instructions, if an firm of auditors, if a chartered accountant, during the course of audit of a bank, some fraud comes to his knowledge, or some foul play comes to his knowledge, or where transactions have not been carried out in accordance with level of delegation, or some excess power has been used, then that matter has to be reported to the Reserve Bank of India. That matter has to be reported to the Reserve Bank of India, and besides also even in accordance with essays, even in accordance with standards on auditing, the auditor has to ensure that financial statements of a bank as a whole are free from material misstatements, and this includes frauds also. So the auditor has to keep in mind this fact, and he has to assess risk of material misstatement and design his audit procedures accordingly, keeping in view the kind of accounting system of the bank, keeping in view kind of internal control system operating in the bank. Further, guys, you would do well to remember that as per provisions of Companies Act 2013, Section 143, subsection 12, Section 143, subsection 12 also, that if during the course of audit an auditor finds that some fraud is being committed, or that some fraud has been committed, he has to report the matter to the central government if it is beyond a certain limit. You remember chapter 5, guys? Chapter 5 on frauds. So what was that limit? Where fraud beyond a certain limit has to be reported to the central government. Now that section here also applies to banks also. So the auditor has to report to RBI, and he has also to report to the central government in case the fraud is beyond that amount. So what was the threshold limit under section 143 subsection 12? Tell me, guys, what was the threshold limit? Do you remember? Do you remember? Do you remember what was the threshold limit under section 143 subsection 12? We had done it in chapter 5. So this way, students, you have to, when you are studying next chapter, you have to continuously correlate all the previous things which you had remembered, which you had understood, with the next topic. That is how a chain would be created in your mind, and your mind would be able to make logical sequence of steps, and it would be easy for remember. It would be easy for you to remember also. Okay. Yes, Pooja is saying 1 crore. Harsh, Goyal, Surbi are also writing. Yes, that's correct. Congrats to Everybody who has remembered. So is that clear to you, students? Is that clear to you? Audit report, contents of audit report of a bank, contents of LFAR, what is LFAR, and different kinds of audit reports, different kinds of reports which are to be given by the auditor of a bank. So even at the sake of repetition, I am again uh, discussing the broad names of the reports which are required to be given by the auditor of a bank. So one thing is main audit report, which you had seen of a public sector bank. The main audit report where the auditor gives his opinion on the true and fair part of the financial statements. Number two, he has also to give report on the effectiveness of internal controls over financial reporting. Okay, so that is also there in the normally in the annexure to the main audit report. Okay, so whether the internal financial controls over financial reporting, whether these are operating effectively so that the financial information, the output of financial information is accurate and reliable. Okay, so that is basically the purpose of internal controls over financial reporting, that whatever figures are there in the financial statements, these can be relied upon, proper controls are there. Okay, and third thing is long form audit report, LFAR. Okay, report on another report is report on compliance with SLR norms, statutory liquidity ratio. And then there is a report on treasury operations of the bank. And there is a report on the Ghosh committee recommendations. There is a report on the Jilani committee recommendations. These are the basically main reports which are to be given. Besides, there is also a report which I would like you to understand right here. It is on Basel III norms. So what are the Basel III norms? It is also a vast concept. Basel, basically there was a Basel Accord among different nations, so that um, in the aftermath of subprime crisis internationally, where many banks became bankrupt. So the Basel norms basically prescribe the norms for capital adequacy. So how much capital a bank should have, keeping in view its risk weighted assets. Okay, so if the advances of a bank um, are risk weighted, there is more proportion of NPAs in banks, then in such a case automatically it have to maintain more capital. So and this also include many supervisory, how to strengthen supervisory processes in the bank. So it also contains norms about this. So this is also one aspect. Basel 3, you have to remember this term, Basel 3, and broadly what it contains. Basel, guys, Basel is the name of a place in Switzerland where this accord was signed. Okay, so this will help you in remembering this name, Basel 3. And the students, you would also do well to remember uh, that while conducting audit of a bank, be it statutory central auditor at the bank level, at the head office level, or statutory branch auditor. He has to follow all those steps which are generally there in case of a company, like communication with the previous auditor before accepting the assignment. He has to communicate with the previous auditor, like say if I am going to accept the branch audit, a fresh branch audit assignment, then I would have to communicate with the previous audit firm who had conducted in the last year, who had conducted audit in the last year, to see what, to ask him whether there exist any professional reasons for me not to accept this assignment. Okay, so this communication is very important. Otherwise, incoming auditor would be considered as guilty of professional misconduct. Okay, and also you have understood in the disqualifications of auditor in Companies Act that a statutory auditor, he cannot accept internal work, he cannot accept internal audit work. So similarly, in case of a bank, if the auditor, if some audit firm is doing internal audit of the bank, then he is not supposed to accept statutory audit assignment. Okay. Similarly, he has also to give declaration of indebtedness, that he is not disqualified to act as an auditor. Same limits which you had done in your chapter on company audit. Okay, disqualification limits. So keeping in view all these factors, the auditor has to accept the assignment, and after accept the assignment, he has to make a audit strategy by studying the accounting system of the bank, by studying the internal control, by evaluating the risk of material misstatements, and in case of banks, the auditor has to also assess the risk of fraud and risk of money laundering, fraud due to money laundering. Say in case of banks, RBI has issued KYC guidelines, know your customer. So every bank has to strictly follow, has to diligently follow those guidelines, and banks have to rank their customers according to these guidelines. Okay, so auditor has to see all these. So Surbi, you are asking now. Pooja is asking ये Basel 3 कहाँ पे है मॉड्यूल में? Pooja, it is Basel 3 is I think on page 12.20 at point number 17 in the heading number 11, conducting an audit. Either it is point number 17 or 16. Stress testing, Surbi is asking what is stress testing. Stress testing, Surbi, is in your old modules. This term has been removed from your new modules. You would see this is not in your new modules. So you need not worry about it. And while conducting audit, the auditor has also to take into account previous year audit report, internal audit reports, or concurrent audit reports, or he can also see the latest inspection report being conducted, or some RBI inspection reports. So these are also important tools for the auditor to see how how the operations have of the branch or the bank have functioned during the year under review, during the year under audit. Because by studying these reports, say by studying the concurrent audit report of the branches of bank, the auditor might come to know whether some fraud has occurred. It is already there. The concurrent auditor has already stated it, or he can reports. These reports become a tool of arsenal in hands of statutory branch auditor or a statutory central auditor. Okay. Now Pooja is asking, sir, explain again Basel III. Now Pooja, you have not to go too much into details of Basel III. You have just to understand that Basel Accord was signed by different countries. It is an international accord in which an understanding was obtained between different countries that all the banks worldwide in the countries which were signatory to those accords, that they would strengthen their they would strengthen the risk management capacity of their banks. They would strengthen the supervisory process of their bank, and they would also uh, improve the health of banks by prescribing a certain minimum capital, which is called as uh, minimum regulatory capital. So this capital, its percentage has been prescribed, and this percentage of capital is in relation to assets of the bank. Broadly, you can understand so much. So the banks have to maintain that much capital in their balance sheets in accordance with Basel III norms. At this stage, you can understand this much only. This is more than sufficient. These 3-4 lines are more than sufficient. Okay. So, Pooja, is that clear? Pooja, is that clear? Please let me know. Now, one point, guys, which we had left out. One point which we had left out during our discussion on advances day before yesterday was the creation of security. So I would like to discuss that point also. Creation of security. This point was left out when we were discussing audit of advances and terms associated with advances. So it is there in your module. A full page is there of these 4-5 terms. So it is good to understand these terms. Students, you understand that when bank sanctions a loan, okay, then the loan is not a clean loan. It generally takes security. Like say, if to a firm, to a company, a cash credit limit is sanctioned. Now cash credit is for purchasing stocks. Now we had discussed what kind of security is stocks. Stock is primary security because loan has been granted against the stocks. Now the bank also takes some collateral security, additional security, say land, building of the promoter, or the house of the promoter, or house of the partner as a security. So how does bank creates that security? By what are the legal terms associated with it? This we are discussing right now. So one term is mortgage. One term is mortgage. Mortgage means mortgage is usually used in relation to immovable properties. Say the company has taken a cash credit loan against stocks, and it has also kept its factory, land and building as collateral security in the bank. So how the bank would create that security? How the charge of bank would be there on that security, on that asset, on that factory, land and building? Because the factory, land and building is standing there at its specified place. So what happens is the company or the firm in whose name land and building is there, it deposits the title deed, or which you know in the common popular language as registry, title of those any document which proves title to those assets, title which proves title to those immovable properties. So these properties, the title deeds of these properties are handed over to the bank in original. वो उसके पास जिसका मकान या जिसकी फैक्ट्री है उसके पास वो टाइटल डीड ओरिजिनल नहीं रहती. ओरिजिनल टाइटल डीड किसके पास चली जाती है? बैंक में. These go to bank, okay, and the party gives, the person in whose name that land or building is there, he gives it in writing that he is making a delivery of these title deeds which consist of so property, and they are creating a security in bank's favor by mortgage. So this kind of mortgage is called as equitable mortgage. Equitable mortgage. This is the most common type of mortgage where properties are mortgaged in bank. Okay. Equitable mortgage. It is known as equitable mortgage. And another kind of mortgage is there, which is known as registered mortgage. Now, registered mortgage, mortgage deed is prepared, which is registered by paying charges in the tehsil according to the rates prevalent in respective states. Okay, so that kind of mortgage is called as registered mortgage. Registered mortgage. And another term is hypothecation. Another term is hypothecation. Another term is hypothecation. So hypothecation is generally used in relation to immovable properties. Oh, sorry, movable properties. Hypothecation is a term which is generally used in relation to movable properties like stocks, like say stocks in case of movable properties, in case of movable assets. So the primary securities we have understood in case of a cash credit limit say are stocks, but the ownership and possession, the stocks would be remaining with that company. The company has to do its business. So the stocks are not going to be shifted to bank. Okay, stocks would be there, but the interest in those securities, interest in those primary securities is created by way of a hypothecation agreement. A hypothecation agreement. So it is an agreement on a proper stamp paper in which again there is a standard language in which it is stated that we have hypothecated stocks, and it is a standard legal format. So hypothecation of stocks is, hypothecation is a term used in context of movable assets. Okay, it is a term used in context of movable assets. Here ownership and possession remains with the borrower. It remains with the borrower. It remains with the party who has taken the loan. Okay, so is that clear? Hypothecation, difference between hypothecation and mortgage. Hypothecation in respect of movable assets, and mortgage in respect of immovable assets. Okay, and when the mortgage is done, then original title deeds are presented to bank. These are given to bank. Now that borrower, in case of mortgage, he cannot sell the property because the original title deeds are there in the bank, and he cannot take loan against the same property from some other lender because the original are there in the bank. Okay, is that clear? And one thing is pledge. Now what is pledge? Pledge Hindi meaning is girvi, girvi rakhna. So pledge is under pledge, pledge is a degree above hypothecation. So under in hypothecation we have seen that ownership and possession remains with the borrower, but in pledge the bank gets to create certain interest, well-defined interest in those pledged assets. Say the borrower may be able to sell those assets, but these are under certain procedures. Now these might be kept in a godown which is controlled by bank. Okay, bank has a system. The borrower has to give a report of all the ins and outs daily from the bank, from that godown. So it is a way above, one step above the hypothecation. Okay, and another term is set off. Now what is set off? Set off basically means if I have taken a loan from bank and there is my debit balance in the loan account, so the bank has right to adjust my debit balance from credit balance in any other account. So if I am having credit balance in some other account, then bank has a right to adjust debit balance of loan account from credit balance in other accounts. Okay, is that clear? Is that clear? And another term is assignment. Another term is assignment. Now what is assignment? Assignment is generally used in the context of, you can understand, say in case of life insurance policies. I am having a life insurance policy, and I want to take loan against a life insurance policy from the bank. Then the charge I would be creating in favor of bank from life insurance policy, it is in the form of assignment. I would be assigning that life insurance policy in favor of bank. Okay, so assignment, this term is assignment. Assignment is used in this context. So basically, these are all legal terms which create charge in favor of lender. Only the terms are different, terminology is different, and their nature is different. Basic thread, basic intention is to create a charge. Okay, the basic intention is to create a charge so that a legal charge is created on those assets, and in case of default by the borrower, the bank is legally able to recover its money. Okay, guys. So is that fine? Is that fine, guys? You have understood all these terms? Is that fine? Please let me know. So guys, would you like to do some questions? Would you like to do some questions at this stage before we move on to next topic? Would you like to do some questions? Please let me know. Tanu is asking, sir, please explain set off once again. Set off, Tanu, you have to understand. Simply, it means giving the right to bank to adjust debit balance in my loan account with credit balance lying in my some other account within that bank. Say I am having a car loan and rupees 2 lakh is outstanding, and I also have saving account in the bank. So I am not paid installment in the time. I have not deposited money in my loan account. So say 50,000 is lying in my saving account, then the bank has a right to debit the amount from my saving account and to adjust it in my loan account, to credit it in my loan account. This is known as set off. Is that clear to you, Tanu? Is that clear to you, Tanu? Please let me know. So we will be doing questions, some few questions, and then we will be doing remaining residuary topics of this chapter. So first of all, questions. So these are correct, incorrect, 6-7 questions. I hope you will enjoy doing these. Yes, first question is the availability of security or net worth of borrower guarantor should be taken into account for treating an advance as NPA. Now you have to tell whether this is correct or not. So simply the statement states that availability of security or net worth should be a factor for treating an account as an NPA. Say, I'll explain it to you with the help of an example. So before answering, please listen to my example. Say the question is saying that a company has taken, say, a machinery term loan and of 50 lakhs. The party is not depositing installments. Period of 90 days has passed by. Installments are overdue for more than 90 days. But the security is available of 2 crore. The company has mortgaged land and building of value of say rupees 2 crore. So whether the account should be treated as NPA or not. So the question is, the basic meaning is that value of availability of security should be taken into consideration for treating an account as NPA or not. So whether the statement states where the availability of security or net worth of borrower should be taken into account for treating an advance as NPA. Now whether this is correct or incorrect. Now whether this is correct or incorrect. Now Surbi is saying, sir, please get the chapter revised from module. Surbi, I will try to do to the extent practically possible. Okay, if time permits. Now the answer to this is incorrect. Only 3-4 mails I've got. Answer to this is incorrect. Because why? Because availability of security is not a criteria for treating an account as an NPA, whereas it is only realizability of dues. Recovery is the criteria, whether installments are overdue or not. This is the criteria. Record of recovery is the criteria and not the availability of security. Security to sabhi accounts mein hoti hai, but the parties are not paying. The papers are there. The bank is having security of 2 crore, but the account is not operating. It is a different matter that bank would be able to realize its money in distant future by resorting to SARFAESI. Okay, so for categorizing an account as an NPA, the availability of security or net worth of borrower, that borrower is very, very strong. He is a person of good means. Okay, he is financially very strong. But this is not a criteria for determining whether an account would be NPA or it would not be NPA. It is not a criteria. Okay, so you have to remember this well. Now, second question. Now, tell me, this question is that a borrower, say company sanctioned a cash credit facility of 100 lakhs, 1 crore from branch of a commercial bank with a margin of 40% on value of debtors. Now CC limit has been sanctioned of rupees 1 crore with a margin of 40% on value of debtors. इसका क्या मतलब है? इसका मतलब है कि भैया जितने वैल्यू है डेटर्स की उसका 40% आपको अपना मार्जिन देना पड़ेगा, 60% बैंक फाइनेंस करेगा डेटर्स के ऊपर. ओके, सो द डेटर स्टेटमेंट एज ऑन 28/2/22 यानी 28 February 2022 is submitted by borrowers showing debtors value of 200 lakhs of rupees 2 crore. So drawing power for above borrower would be 120 lakhs, implying that he would be entitled to use funds of 120 lakhs. Whether this statement is correct or incorrect. Only Rohan Jain He has sent the mail till now. You have, guys, you have understood the question or not? Please let me know. Do not hesitate. If you have not understood the question, please let me know. If you have understood, then you can answer. First, tell me whether you have understood the question or not. Yes. What is the answer? What is the answer, guys? Please let me know. What is the answer? Just two mails. Or rather, only one mail. Rohan Jain. Rohan Jain, only one mail. Yes, guys, waiting for you. Waiting for your response. Tell me. Tell me, students. What should be the answer? What should be the answer to this question? Yes, Sandeep Sandhu and Harsh Goyal, Tanu, Surbi. Surbi has, sorry, Tanu has not understood the question. So this is also incorrect. So I would solve it for you, Tanu, and for others who have not understood. So guys, the question states that I think the question states that the company has been sanctioned. What was the sanction limit? Sanction limit is 1 crore or 100 lakhs. Sanction limit is 1 crore or 100 lakhs. And what was the margin? Less margin. Sorry, margin was 40% on the value of debtors. So what was the stock? What was the value of debtors as per debtor statement? What was the value of debtors? It was 2 crore, 200 lakh. So what is the margin which has to be kept by the company, by the party? Margin at the rate of 40%. So which is 80 lakhs or 0.80 crore. 80 lakhs. Okay. So what is drawing power? Drawing power is 1.20 crore. So does it mean that party can withdraw money amounting to 1.20 crore? The question says that party can withdraw money up to 1.20 crore. No. But why? Because the sanction limit of party is 1 crore. So although he is having drawing power, which is more than sanction limit, but he cannot withdraw money beyond the sanction limit. He can withdraw money only to the extent the limit has been sanctioned to him, even though the drawing power is more. Okay, so rest would be his own margin. He has to put his own money. Is that clear to you, Tanu? Please let me know. Pooja, Tanu, please let me know if the answer is clear to you or not. Question number second. Say the party, the borrower can utilize funds only to the extent of sanction limit. If say his drawing power is coming beyond sanction limit, then he cannot withdraw the funds or he cannot lay claim on the funds which are beyond the sanction limit. अरे भैया वो तो sanction ही नहीं हुआ, वो तो sanction letter में ही नहीं था, तो कैसे वो उससे withdraw कर सकता है? So that is why the statement 2 is incorrect. Drawing power, although drawing power is 1.20, drawing power is calculated correctly in the statement, but it does not mean that party is entitled to withdraw that money. Okay. Yes, Rohan is asking if sanction limit is 100 lakh and debtor's value of debtor is 80 lakhs. Yes, Rohan. Then if the value of debtor is 80 lakhs, then what would be DP? Now sanction limit is, if say sanction limit is 100 lakh and value of debtor is, you are saying 80 lakhs. Then what is the margin? Less margin at the rate of 40%. Say 32 lakhs. So drawing power would be 48 lakhs. DP would be 48 lakhs. So the borrower is entitled to draw only up to 48 lakhs, although his sanction limit is 100 lakhs, because DP is lower. In our statement, DP was higher. So whichever is lower, we have to take. DP drawing limit cannot exceed sanction limit. Sanction limit is the limit beyond which he cannot draw. If drawing power is less, then we will say he can draw up to drawing power, and if drawing power is more, then we will say he can draw up to sanction limit. Is that clear, Rohan? Please let me know, is that clear? Yes, Surbi, margin is always on primary security. Now third question is, SMA account is a kind of non-performing asset. Tell me, you had understood this term day before yesterday. SMA means special mention accounts. In advances, special mention account. Yes, Surbi, margin is always on primary security. SMA account is a kind of non-performing asset. SMA account is a kind of non-performing asset. Tell me whether this statement is correct or incorrect. SMA account is a kind of non-performing asset. Only Harsh Goel. Only mail received from Harsh Goel. SMA account is a kind of non-performing asset. Is that correct or incorrect? Only one mail till now, guys. Simple, fairly simple question, direct question. Direct question, either you know it or you do not know it. Either you know it, either you know the meaning of the term or you do not know the meaning of the term. There is no other escape route. Yes, guys, waiting for your answers. SMA account. Yes, SMA account. SMA account is a kind of non-performing asset. This statement is incorrect because SMA is a standard asset. This is incorrect. SMA special mention accounts, we had learned that special mention accounts are those accounts which are showing some signs of stress, but technically these are still not become NPA. These have still not become NPA because the overdues are, say, broadly are still less than 90 days. Okay, so special mention account are a standard asset, but these are showing some stress signals. But these are not turned into non-performing assets as per RBI guidelines. So next, number 4 is, now this is also very important and direct. Asset classification is done borrower wise and not facility wise in case of banks. Tell me whether this statement is correct or not correct. Now we have to classify the advances into performing or non-performing, borrower wise or facility wise. Borrower wise or facility wise. I had told you day before yesterday very clearly that this point is very important. Asset classification is done borrower wise and not facility wise. Correct or incorrect? Waiting for your responses. Asset classification is done borrower wise and not facility wise in case of banks. No mail, guys? Yes, come on. No mail till now. Sandeep, Sandhu, Harsh, Goel, Surbi. Yes. This statement is correct. Asset classification is done borrower wise always, not facility wise. We had discussed that say if a person is having car loan and housing loan, and car loan, in car loan installments are coming, but in housing loan these are not coming. So both the loans would be classified as non-performing. So asset classification is done borrower wise, not facility wise. It is not that my car loan would be performing and housing loan would be NPA. It is not like that. If my one loan goes bad, that all my loans go bad. All my loans go non-performing for the purpose of asset classification. Next. A general provision of 25% is required to be made in books of a bank in respect of substandard assets, SSA. Tell whether it is correct or incorrect. In case of substandard assets, the assets which have been identified as substandard in the books of bank, whether a provision of 25% of the outstanding balance is required to be made. Whether this statement is correct or not, this is also a factual question. Either you know or you do not know. Tell me what is the answer. What is the answer, guys? Tell me. Yes, many of you have answered correctly. The correct percentage is 15%. So this statement is incorrect. In case of SSA, 15% provision is required to be made. Now, sixth question. Due diligence is not required in credit appraisal of a prospective borrower. Prospective borrower means a person who has come to the bank with a request to take a loan. So, whether due diligence is required in assessing the credit proposal or not. Whether due diligence is required or not. The statement says due diligence is not required in credit appraisal of a prospective borrower. Tell me whether this is correct or incorrect. Yes, Preksha Kothari has also answered correctly, 15%. Due diligence is not required in credit appraisal of a prospective borrower. Due diligence is not required in credit appraisal of a prospective borrower. Yes, guys, waiting, just send your mail lightning fast. Make it lightning fast. Fairly simple question. Simple common sense. Simple common sense question. Simple common sense question. Due diligence is not required in credit appraisal of a prospective borrower. Yes, this is incorrect. Due diligence is required. So what is due diligence? That somebody comes to me, I see the project, how the borrower is going to pay, what are his means, how much money he would be able to bring, whether the project is worth or not, what are his credentials. These all things I would make a due diligence, I would make inquiries, I would make discrete inquiries. Okay. Seventh. Seventh is statutory branch auditor in case of nationalized bank are appointed by bank acting through its board of director after a prior approval of central government. Now this is a law question. Tell whether this is correct or incorrect. Statutory branch auditors in case of a nationalized bank are appointed by bank acting through its board of directors means the board of directors appoint but after prior approval of central government. Yes, Harsh and Rohan have answered correctly. After prior approval of not of central government, it is of RBI. So this statement is also incorrect. Okay guys, so I think students you must have found these questions useful, and I think you are understanding this chapter quite well. So at this stage we are going to take a short break of 10 minutes. See you after 10 minutes guys. Okay. Okay, break for 10 minutes. Yeah. Yes, welcome back, students. So Tanu is asking what is book debts. Tanu, book debt is another name of debtors. This term is identical with the debtors. When we refer to book debts, means debts which are outstanding in books. Book debts, debtors. And Rupesh Bhimani is asking lien. Lien is another term uh, for creation of a charge. So whenever some borrower gives his consent uh, to a bank or to somebody to create a charge in his favor, then it is called as a lien. So it is a general term. A lien, you can understand, basically charge that the property in whose favor lien is created, it is under charge. It means that lender has a charge on that property of the borrower. Okay, so lien is a general term. Okay, now we come to uh, this subtopic of audit of revenue items. So how audit of revenue items is to be conducted in case of a bank? Revenue items, you understand, revenue items means items appearing in uh, profit and loss on the income side as well as on the expenditure side. So guys, remember we had learned in at the beginning that profit and loss and balance sheet of a bank are prepared in accordance with third schedule of the Banking Regulation Act 1949 and Form B. Form B prescribes format of profit and loss. So these are the main items which are there in Form B as per third schedule of Banking Regulation Act 1949. Fairly simple. Now, one side is income side. So what is on the income side? Interest earned and other income. Interest earned and other income. So from where a bank would be getting its interest, obviously it would be interest income from advances. So the major chunk of income in the bank would be interest on advances. And it can also be interest from investments. Say a bank has made some investments in government securities and it is getting regular interest at certain fixed intervals. Okay, so that also comes under the head interest earned, because the nature of income is interest earned. If the nature of income is interest earned, it would be credited under this head, it would be shown under this head under interest earned. Similarly, if say the bank has is earning interest from money is given to other banks or from RBI, then it would also fall under the head interest earned. So what are the auditor's concerns regarding audit of interest earned? Now the auditor would be requiring, he would be obtaining assurance that this income which is appearing under the head interest earned, it is reflected properly. Then how he is going to ensure that? He has to ensure that interest rate is correctly fed into the systems, and for this he can make a test check. He can make a test check of few advances on a sample basis, that what was the rate of interest prescribed under those advances and whether it has been correctly fed into the system, because students, you have to understand that uh, in these days branches are under the core banking solution CBS system. So the interest is the CBS automatically uh, debits the borrower account and credits the interest account on the stipulated interval. Say in case of cash credit on a monthly basis, or in case of agricultural loans might be on a half yearly basis or other stipulated intervals or quarterly. So the auditor would be concerned that number one, the interest is stated here correctly, and for this he would be performing audit procedures. Okay, and he would also be ensuring that there is no unrecorded income on account of interest earned, because say if there is slippage, if there is leakage, if in some account interest has not been correctly fed, then the profits of the bank would be reduced by that extent. So this is a very important point, and you have also to understand that although books of accounts are of a bank are prepared on accrual basis, but we have also learned that in case of non-performing assets, in case of NPAs, interest has to be booked only on the basis of actual recovery, and unrealized interest in the case of non-performing assets has to be reversed. It has to be reversed. Only that amount in case of NPA accounts would be credited to interest account, would be taken to income, which is recovered. Okay, so is that clear to you guys? And as per RBI guidelines, one more important thing is there, that if there is some income which exceeds 1% of the total income of the bank on gross basis, or if the bank is following net of cost method, then it is more than 1% of the net profits before taxes, then it should be considered on accrual basis as per AS 9, as per accounting standard 9. Okay, so this point is also important from materiality point of view, and you have to remember this. And another important point of the NPAs is when there is revenue uncertainty. In case of NPA account, then interest income has not to be realized. The ordinary accrual principle would not apply. Okay, when an account turns non-performing, the principle of accrual would not apply, and the booking of interest income is only on the basis of recovery. Okay. So is that clear? Interest earned is clear. Similarly, while auditing interest earned, the auditor has to keep in mind that there is item under the head advances. We had discussed it in the previous lecture. Bills purchased and discounted. So obviously when there are bills discounted, when there are bills purchased, there would be interest on bills purchased and discounted. But when the auditor has to bear in his mind that when bills are purchased, bills are discounted, the bank is generally recovering the interest on bills purchased discounted upfront. So the bills which are discounted near the year end, these might contain interest pertaining to following year. So the amount of interest which pertains to interest pertaining to following year, that is to be separately shown under the head other liabilities, and this is not to be booked as income. Otherwise, matching principle would be violated, because we have to show income only for the year under audit, because expenses are also in relation to that income. Okay. And another important point is in case of bills for collection. So generally in bills, sometimes bills are sent for realization by the bank on behalf of its customer. So the auditor has to see that income of these bills is credited only when the bills are realized. Only when the bills are realized, only then, and these are credited, only then interest income is realized. Only then it is taken to income head. Okay, so guys, you are clear about what falls under interest earned and what points auditor has to keep in mind while auditing interest earned. And second point is other income. Now, what is other income? What is other income in case of a bank? Can you think of some example, guys? What is other income in case of bank? What could be other income in case of bank? Now, it could be, say, we had discussed in our previous class that bank is also granting non-funded facilities, non-funded credit facilities. So I had told you that when a branch grants non-funded credit facilities, like when it issues a guarantee, when it issues a LC, it collects certain charges, it collects commission. So this kind of income falls under the head other income. Okay, other type of other income, example of other income can be locker rent. So lockers where people deposit their valuables. Okay, so these come under the other income. Other example of this head could be processing charges levied by banks on cash credit facilities or on credit facilities. Say when bank sanctions loan to a borrower, it collects certain processing charges for processing the application. Okay, so these are, say for example 200 per lakh, okay, or 250 per lakh, or say a percentage of the loan amount. So these are called processing charges. So these kind of charges also fall under the head other income, because these are not in the nature of interest. Okay, so the auditor do well to test check few large items on falling under this head, whether the bank or branch, as maybe the applicable case, is collecting processing charges in accordance with its laid down circulars, in accordance with the head office guidelines. Okay. And profit on sale of investments, and these credit card fees, all these type of transactions. Any transaction, any income you can understand which is not in the nature of interest, it would fall under the head other income, because there is no other head. There are only two heads: interest earned and other income. So any income which is not in the nature of interest, obviously it is going to fall in the head other income. So what you have to do, you have to remember 5-7 main heads of other income, and what should the auditor bear in its mind while auditing other income, while auditing income under this head, and what should he bear in mind, what are the special considerations which apply while verifying, while auditing interest earned. Okay, is that clear? Are you fine with it, guys? Fairly simple things, nothing difficult. And you have to remember special points relating to NPA. This point, guys, you have to remember that in case of NPA, income has to be booked only upon recovery. It is not to be booked only, it is not to be booked on accrual basis. This is the most fundamental point. And when an account is declared NPA, when an account is identified as NPA, the unrealized incomes of past periods have also to be reversed. Okay, this you have to remember. And one related point here is pertains to partial recoveries in case of NPAs. Say there is some recovery in NPA account, but how the bank is going to apportion it, whether it would apportion it to the principal amount overdue or whether it would proportion it to the interest, whether it is going to apportion it to the interest first or whether it is going to apportion it to the principal first. Now the RBI guidelines in this respect state that the bank has to formulate an accounting policy in this regard, that how appropriations are to be made, and these policy has to be followed on a consistent basis. Okay. And now we come to expenses side. Now what is on the expenditure side? What is on the expenditure side of profit and loss of a bank? It is interest expended. It is interest expended. So interest would be on deposits. Now students, you have to remember, you must be knowing that there are basically three kinds of deposits. You can say three kinds of accounts, deposit accounts in the banks, like saving accounts, current accounts, and time deposits accounts. First two types are demand deposits. Okay, saving accounts and current accounts are demand deposits. These demand deposits mean these are withdrawable on demand. Okay, and you are very much familiar with saving accounts. Everybody of you is having a saving account. You have a certain balance in your saving account and bank pays you some interest, okay, on your saving account. It is being credited in your account. Few hundred rupees must be credited in your accounts quarterly, half yearly. And you have to remember that no interest is paid by bank on current accounts. So current accounts are the accounts which a business is maintaining with a bank, in which there are routine credit and debit transactions. So banks generally do not pay interest on current accounts. Banks pay interest on saving accounts. Banks pay interest on time deposits. Time deposit is when you make a deposit with the bank for a fixed period of time. Say you make a FD, fixed deposit with banks, say period of 1 year or 2 years, or open a RD account with a bank, recurring deposit for a period of 3 years or 4 years. So such kind of deposits are known as time deposits. So the main expenditure of banks under the head interest expended is on interest paid on time deposits, and part of it relates to interest paid on saving accounts. Okay. So how the auditor is going to verify this? How the auditor is going to proceed with this work as far as it relates to verification of interest expended? Now, what the auditor can do is he can call for a monthly balances of various heads, like what was the monthly balance of saving accounts, what was the monthly balance of fixed deposit account, and he can also verify the interest paid with the average balances. So by performing this sort of analytical procedures, he would come to know whether there are any substantial variations or not. Besides, he can also check few accounts in detail by seeing whether the interest rate has been correctly applied or not. Say during the year there has been interest revision in the fixed deposit accounts 2 times or 3 times. Bank has say decreased interest rate on deposits. Then he has to see whether the date from which interest rates have been decreased have been correctly fed into the master data, because at the bank level it is going to make huge impact. Because if the interest rate has been decreased by the bank and it has not been correctly applied in the system, then it would then figures under this head would not be reflected correctly. Okay. So clear, guys? Interest expended. And other operating expenses. So all the residual expenditures fall under the head other operating expenses, like establishment expenses, payment for employees, provision for salary of employees, rents, printing and stationery, and all advertisements, depreciation, legal expenses, auditor fees, postage telegram, repair and maintenance, all other heads, all usual audit procedures which are there in case of any other organization, these also apply here. These also apply in case of banks. Okay. So provisions and contingencies. Then there is one head, provision and contingencies. This is also a very important head, because under this head all the provisions which the bank has made, say in respect of NPAs, these would all be there. The profits would be reduced by making appropriate provisions. So all the taxation provisions would also be there, debited under this head. So the auditor would like to see whether all the calculations are in order. He would ask necessary calculations from management whether provision for taxation has been made correctly or not. Similarly, in respect of NPAs, he would have to ensure that all the provisions which we had read in case of substandard assets, it is 15%. In case of doubtful assets, it is 25, 40, 100. In case of loss assets, 100%, whether this has been made or not correctly in accordance with the RBI guidelines, because again these are going to impact the profits of the bank. Okay. So these are the guys main considerations which the auditor has taken into account while auditing the revenue items of a bank. Okay, so now we will quickly go through your module and summarize the chapter. So I am sharing the module with you. So guys, we'll quickly share. I'll quickly share. Yes. Now this starting points relates to structure of banking, which we had done day before yesterday. It shows various types of kinds of banks operating in India. Commercial banks, what is the function? RRBs, cooperative banks. Okay, you have to remember their names and understand the meaning and what is the distinctive points. Payment banks, development banks. This we have all done. Small finance banks. Okay, so the important distinction between payment banks and small finance banks is that you have to that these cannot lend. Payment banks cannot lend, and they can accept only restricted deposits only up to rupees 2 lakhs only in current and saving accounts. Whereas small finance banks, they can lend to the unorganized sectors like small and micro business units and small marginal farmers. Okay. And then what is the main functions of a bank? Again, accepting deposits and granting advances. What is the what are the functions of RBI? Issuance of currency, regulation of currency, inspection of banks, acting as a banker to central state government, and it is regulator. That is important, that no bank can commence business of banking or open new branches without obtaining license from RBI. The RBI has power to inspect any bank. Okay, so RBI is the regulator of banking sector. Even if some existing bank has to open new branch, it has to obtain license from RBI. And for starting some new bank also, banking business also, permission of RBI is necessary. Okay, and this we had understood that banking operations are carried out at branches only. And there are back offices. Back offices are controlling authorities. These are controlling authorities, administrative offices, regional offices, zonal offices, head offices, head office, HO, which lays down the overall policy of the bank. What should be the position of delegation of powers, and when branches are sanctioning the loan, the regulatory, the controlling authorities, regional office, zonal offices, they are keeping a watch. They are calling for the reports. Okay, and many kind of acts are applicable to banks. Banking Regulation Act, Companies Act. As for SBI, there is special act because SBI has been formed under this act. And Prevention of Money Laundering Act, RRB Act, IT Act, SARFAESI, very important, SARFAESI, Securitization and Reconstruction of Financial Assets, through which this is an act by which the banks are able to take possession of the assets in case banks borrower make a default. Now, what are the special consideration? What are the peculiarities involved? Special considerations in banking. In bank audit, why? What are the peculiarities involved? There are huge volumes. Very important. Sometimes this type of simple questions also come. Huge volumes, wide geographical spread of banks network, large range of products, extensive use of technology and banking regulator, and I would like to add applicability of large number of laws, large number of acts or laws. This is also a very peculiar that like many acts, Banking Regulation Act, Companies Act, Information Technology Act, Surface Act, Payment and Settlement Act, so many acts are applicable. Okay. Now bank audit report on adequacy. Now in addition to main report, this we have done today. One is main audit report, that is independent auditor's report. He has to give independent auditor's report. Besides this, he has to give these reports. Report on operating effectiveness of internal controls over financial reporting. Okay. LFAR report on this we have studied today. I have shown it to you. LFAR in question answer form. Report on compliance with SLR requirements, whether treasury operations have been conducted. Report on income recognition, whether income recognition norms have been followed or not. Okay. Serious irregularity. Ghosh committee, Jilani committee, this we had discussed. Ghosh committee, Jilani committee. Okay. Now these are general things, understanding of the accounting system in banks. General things, bank audit approach, audit plan. These are two general things. Now income recognition policy, again very important. The policy of income recognition should be objective and based on record of recovery. So income from NPA is not recognized on accrual basis but booked as income when it is actually received. So this point, guys, you have to fit it in your minds. This is one of the most important takeaways from this concept of NPA. Most important takeaway. And form and content of financial statements. That financial statements are prepared in accordance with the third schedule to the Banking Regulation Act. Third schedule to the Banking Regulation Act. Banking Regulation Act 1949. And it has to be in Form A, balance sheet, and Form B, P&L. Okay. And every banking company has to comply with disclosure requirements under various accounting standards as required under Section 133 of Companies Act, or as these are applicable to banking companies as prescribed by ICAI. So again, audit of accounts, all eligibility, qualification, disqualification, as these are applicable to companies, similarly these are applicable to a bank. There is no difference. Okay. Appointment of auditor, this we have done today. Auditor of a banking company is appointed at AGM of shareholders, and the auditor of nationalized bank is appointed by the bank concerned through its board of directors. In both cases, here it is very important. In both cases, approval of RBI is required before appointed. In either case, it means even in this case, approval of RBI is required before the appointment is made. That is very important. That is what what distinguishes it from regular appointment in case of a company. That is how the appointment of an auditor in a bank is different from the appointment of auditor in a company. Okay. Yes, Rupesh Bhimani, you are saying correctly. It is appointment of auditor is made under section 139 in case of a company. So remuneration of auditor in case of a banking company, it is made by shareholders in AGM, like in case of a company. And remuneration of auditors in case of nationalized banks is fixed by RBI in consultation with central government. So powers of auditor, again, these are identical as in case of company auditor, identical with company auditor, no difference. So whatever you had done in your chapter on company audit, same the power, all the powers bank auditor has. Okay. And these things we had seen the audit report of a public sector bank, all these points have to be reported, whether uh, true and fair view transactions of bank which have come to the notice of auditor, whether these are in the powers of bank, whether or not returns received from the offices and branches of the bank have been found adequate, because in public sector banks there are large number of branches, thousands of branches. So the auditor has to specifically state whether the returns received from the offices and branches, offices means administrative offices, and branches of the bank have been found adequate for the purpose of his audit. Format of the report. Now, again, we have seen the format, and important thing is that CARO is not applicable. That reporting requirement relating to company's auditor report, here it is 2016 is written in your module, it should be 2020. Okay, so CARO 2016 is outdated now. So CARO 2020 is not applicable. 2016 was also not applicable. 2020 is also not applicable. Okay. What is long form audit report? That he has to give LFAR. So this we have discussed in fair detail. I had shown you that it is in question answer form, what kind of questions it contains, and the auditor has to give answers to that. Okay. And these are all reporting to RBI in relation to fraud. These are all in relation to fraud. That if some fraud comes to the knowledge, it has to be reported to RBI. Okay. And the auditor's responsibilities in this regard, and fraud reporting under section 143 involving 1 crore or above. The same procedure which is there in case of a company. In case of a company under section 143(12), it is there. Same procedure, identical procedure, there is no change. Okay. Now, all these conducting an audit, these are general points. That internal assignment in banks by statutory auditor, he cannot accept if he is the internal auditor. Declaration of indebtedness, he has to give, and communication with previous auditor, this I told you. Communication with previous auditor, it would be against professional ethics. So if he does not communicate, then it would be a case of professional misconduct. Okay, so the incoming auditor, whether it be branch auditor or statutory central auditor, he has to communicate with the outgoing auditor to seek whether there exist any professional reasons for him for not accepting the assignment. Okay. So these are all general points. He has to assess the risk of material misstatements. He has to assess the risk of fraud. He has to assess the risk of money laundering. These are all general points we have discussed. And there is also point related to Basel III. Now somebody had asked where is Basel III? So here is Basel III. So you have to understand Basel III Accord. Okay. So again these are, now we come to advances. Now here all the things which were there in relation to advances, the various terms associated with advances, audit approach relating to advances, these provision relating to NPAs, these are all discussed here. Same things, we have left out nothing. Funded loans, non-funded loans, these are terms, examples of non-funded facilities, letter of credit, bank guarantees, letter of credit, bank guarantees, I have already explained to you. And what do advances comprise? Term loans, cash credit, bill discounted, interest bearing staff loans. And this is relating to classification and nature of security, primary security, collateral security. We have already discussed primary security, collateral security, mode of creation of security. This we have discussed today. Mortgage, equitable mortgage, registered mortgage, pledge, hypothecation, and then there is assignment and set off and lien. Lien is, I told you, simple creation of a legal charge with the consent of an owner. Okay. And then there are prudential norms on income recognition. What are standard accounts? What are SMA accounts? SMA 0, 1, 2, NPA, substandard, doubtful, loss. And there is also then provisioning. What are the conditions of NPA? Very important. When an asset becomes NPA, 90 days norm for term loan, out of order for CC, bill remaining overdue for a period of more than 90 days. Then when a CC account, this is also very important. When a CC account becomes out of order, when a CC account becomes out of order. So here example is also given. Then there is this provision 15% in case of substandard, doubtful, D1, D2, D3 loss assets. This we have done already in quite detail. Okay. And advances under consortium, this we had discussed. Member banks, allocation of drawing power under consortium, this we had discussed. Accounts where there is a erosion in value of security. So these will straight away these will go to either to loss assets or doubtful assets instead of first going to substandard assets. So this describes how in what kind of situations these would go to doubtful category and loss assets. Okay, how we can skip in which cases SSA classification will not necessary because there is a substantial erosion in the value of security. And these are all like advances again, KVCs, NSCs, agriculture advances, short duration crop, long duration crops. We had discussed it day before yesterday. And drawing power. This is also very important and we have done it in fair detail. We have done it in fair detail. Drawing power, what is its meaning? Different from sanction limit. It is the limit up to which a firm or company can withdraw from the working capital limit sanction. Now we had just done a practical example of drawing power. So all these things are covered under this. These are just explanations. This is also an example. And what are the general consideration for audit of advances? That advances represent amount due to bank. There are no unrecorded advances. Valuation of advances is fair Advances are classified in accordance with the accounting principles. These are supported by loan documents. Okay. And these are all internal controls relating to advances. And this is audit of revenue items, which we have discussed right just now. Okay. So guys, I have quickly taken you through this chapter, through the summary of this chapter. And within the time slot allotted, I think we have tried it to make the concepts, to make you understand the concepts. When you are going to study it from your module, you would be comforted with what you have understood, with what you have learned, with the help of examples and with the help of practical things shown to you. And we end this chapter here, and I wish you all the very best for your exams. Students, please understand the concepts, remember the things, and practice how to answer. These are three important pillars of your preparation. Understand the concepts, remember the things, and practice how to answer. Sometimes we know the concept, but our hands are not working because we are not practicing regularly. So I would suggest you should also jot down few answers and tally with their standard answers. You write it in your own words, but you have to remember the concepts and you have to remember the keywords. So this is all from my side. Okay, good night. All the best. Happy preparation time, guys. Happy preparation time. All the best to you guys. Thank you. Thank you, guys. Yes, yes.